Welcome to Dementia-Friendly Prince George's County, Maryland Northern Sector webinar series for caregivers. Today's topic is Insurance 101 for Seniors, sponsored by Prince George's County Government and the Department of Family Services.
Okay, and I'll introduce our speaker for this evening. Patricia Dorn has been with the Consumer Education and Advocacy Unit of the Maryland Insurance for 10 years, educating Marylanders about all types of insurance products and helping Marylanders understand their rights with regards to insurance. A little bit about the presentation for this evening, Insurance 101 for older adults. It will cover an introduction to the Maryland Insurance Administration, an overview of auto insurance, insurance fraud, life insurance, and why you should consider maintaining your homeowner's insurance after you've paid off your home. Just one quick note, if you have any questions throughout the presentation, Patricia will pause and open up a few moments to ask questions throughout the presentation, but you can also type your question in the chat or questions tab on your screen, and we will have another Q&A session at the end of the presentation. Okay, with that being said, I will turn it over to our presenter for this evening, Patricia Dorn.
Thanks, Sharon. Again, my name is Patricia Dorn, or Patty, and I'm happy to be here with you this evening. I'm going to be talking Insurance 101 for older adults. We just recently rebranded it from Insurance 101 for seniors, so the title from what you logged into is a little different than the one you're seeing on the screen. Next slide. All right, so I'm going to introduce my agency. What is the Maryland Insurance Administration? So who are we and what do we do? The Maryland Insurance Administration is the Maryland state agency that regulates insurance in Maryland. So what does that mean? That means that we're the entity that licenses the insurers, so the insurance companies, as well as the insurance producers. So the producers, those are your agents or your brokers. So we give them their licenses to do business in Maryland. We examine the business practices of our licensees to make sure that they're in compliance, that they're complying with applicable laws. We monitor the solvency of insurers. That means that we're making sure that those insurance companies that are doing business in Maryland are going to have the money to pay your claims in the future. We review and we approve the insurance policy forms, so your insurance policies, and we review insurance rates, so the premiums, the rates that you're charged, to ensure that they're not inadequate. So insurance companies need to be collecting enough money to pay claims in the future. So they're not inadequate, but that they're also not excessive or unfairly discriminatory. And very important, we investigate consumers. So we investigate your complaints, consumer and provider complaints, and allegations of insurance fraud. At the bottom of the screen, there is a How the MIA Can Help video. So we're not going to play any videos tonight, but this is just an FYI. We do have a YouTube page, and we have lots of great videos about all kinds of insurance products, as well as more information about what we do as an agency on that YouTube page. I do just want to make a quick note. If anyone wants a copy of these slides, you're welcome to send me an email. Let me see if I can access the chat real quick. I think I can. I'm going to go ahead and I'm going to put my email in here, and you can send me an email and just say, hey, send me a copy of these slides. I think that probably worked. Next slide, please. So if you feel that your insurer, your insurance company, or your insurance producer, your insurance agent or broker, has acted improperly, you do have the right to file a complaint with us, the Maryland Insurance Administration. So some examples: if they improperly denied or they're delaying payment of all or a portion of your claim, improperly terminated your insurance policy, if you believe that your insurance premiums were raised without proper notice, if you believe that someone made false statements to you in connection with the sale of insurance or with processing an insurance claim, or if you believe you've been overcharged for services. And at the bottom of this page is our 800 number and our website as well. Next slide. All right, so the first thing that we're going to talk about today is auto insurance. In Maryland, Maryland law requires that all registered vehicle owners carry a minimum amount of liability coverage. So there is a minimum, and that is $30,000 for bodily injury per person, $60,000 bodily injury per accident, so regardless of the number of people per accident, and $15,000 of property damage. That is the minimum in Maryland to essentially put your car on the road, drive your car legally. Just look at those numbers. I think most people will know those numbers are pretty low. You probably can't buy a new vehicle anymore for $15,000. And so the property damage, that would be a vehicle if you were to cause damage to another person's vehicle, or something else, a fence, etc. And that could easily go over $15,000. I think most of us do know that. So just be aware that the minimum is pretty low. Next slide. Uninsured motorist coverage. So this is the coverage that protects you and other insureds under your policy's terms when an accident is caused by a driver who does not have auto insurance, or they don't have enough, or when the owner of an at-fault vehicle cannot be identified. So in the case of a hit and run, you may be using your uninsured motorist coverage. Or if you're in an accident with somebody who doesn't have insurance, or they just don't have enough. So Maryland law requires that all registered vehicle owners carry a minimum amount of uninsured motorist coverage. And by law, it's the same. It's 30 for bodily injury per person, 60 and 15 for property damage. So those minimums are the same. Next slide. So liability insurance. Let's talk a little bit about liability insurance, what you need to put your vehicle on the road. So what you're doing is, you're essentially protecting other drivers from yourself with this liability coverage. It protects policyholders and other insureds when they cause an accident. So when you cause an accident, there's two types. The bodily injury, that protects you if the driver of your car causes an accident and an injured person makes a claim or files a lawsuit against you. The exceptions would be if that driver of your car is excluded. So excluding a driver from your car, that's something that you need to do with the insurance company. You say, all right, I live with my aunt, and for whatever reason, she's a high risk, perhaps I don't want her to be driving my car. You might choose to exclude somebody. You need to be very, very careful when you choose to do this. However, it is something that you can, in most situations, do. So bodily injury liability coverage protects you if the driver causes an accident and an injured person files a claim or a lawsuit against you. So unless that person's excluded, or they do not have a reasonable belief that they're entitled to drive your vehicle. Property damage liability is going to protect you if the driver of your car causes an accident resulting in damage to someone else's property. So another vehicle, a fence, the same, unless they're excluded. So you've excluded them from your policy, or they don't have a reasonable belief they are entitled to drive your vehicle. Next slide. All right, collision coverage. So that was liability coverage. And now we're going to talk about collision and comprehensive. Oftentimes people think of liability only and full coverage. So they think liability only as one option, and then your full coverage includes under the umbrella of liability, collision, and comprehensive. Fair enough. Just an FYI, you can have collision without comprehensive, you can have comprehensive without collision. So collision coverage is an optional coverage that you purchase to provide for payment of property damage to your insured vehicle from a collision with another vehicle or object. So now you're protecting your own vehicle. Now I'm saying optional. Of course, I think we all know it's not always optional. If you finance your vehicle, your lender it's not going to be an option. Your lender is going to say you have to have collision coverage because they want to protect their investment as well. But the state of Maryland is not saying that you have to have collision coverage. So that's the optional part. If you are in an accident and have collision coverage, your insurer will pay to repair your vehicle or will pay what your vehicle was worth right before the accident occurred. All right, so as of that day, in the situation that it was in, right before the accident occurred. Comprehensive coverage. That pays for damage to your car that results from things other than a collision. That could be vandalism, it could be theft, it could be storm damage. Something like a tree falling on your car, for example, or if it were stolen. That's going to fall under the umbrella of the comprehensive coverage. And just an FYI, typically both collision and comprehensive coverage do have a deductible. Next slide. So how are auto insurance premiums developed? There is a wide criteria considered, lots of variables to help the insurer to predict the likelihood that you will be in an accident or file a claim. So that's essentially what they're doing when they're telling you this is the premium that we can offer you. There's another link to a video that goes into a little bit more depth, and I'm going to go into tonight because, again, I have 4 topics to cover. So if you do want to check out our YouTube collection of videos, I do highly recommend it. So they're possibly going to consider your age, whether or not you're male or female, your marital status, the number of miles you drive annually, your driving record. Most people know that. Credit history. Many people don't know that, and I will go back to that in a little bit more detail. Purpose the vehicle is driven for, where your vehicle is garaged, in most cases that's where you live, your driving experience, as well as any claims history. And so just to go back real quick to credit history, your insurer can base part of your premium on your credit history. That said, not all insurers do. And I am going to show you a little bit of a rate guide that's going to tell you which insurers do look at your credit and which insurers do not look at your credit. Next slide. And I just want to say, please use the chat if you have any questions. So comparison shopping is super important with auto insurance. And I do recommend that you do comparison shop every couple of years to make sure that you're still out there getting the best rate. Auto insurance is expensive. And, you know, looking around every couple of years is a really good idea. When you compare policies, though, make sure that you're doing an apples to apples comparison, right? If you get a $500 deductible with one quote, a $1,000 deductible for the next quote, you're not really doing an apples to apples comparison. So keep those things the same. You know, the deductible that you're looking at, the coverage limits that you want, keep it the same from quote to quote. Make sure that the information that you provide is accurate. Take the time to, you know, look it up if you don't know instead of guessing, and make sure that you provide that same information to each insurer that you call. Ask about the deductibles and ask about when they apply. Next slide. So this is the cover of our auto insurance, a comparison guide to rates. This comes out every 6 months and we publish it with updated rates from the auto insurers offering auto insurance in Maryland. You can download it as a PDF from our website. And so on our website, insurance.maryland.gov, let me put that in the chat. So on our website at the top, it says consumers, it's like 2 over. You can click on that and then you're going to see a list of insurance products, auto insurance being right at the top. Click on that and it will take you to the rate guide. You can download it, but you can also just call us and ask to have a copy, a hard copy snail mailed to you if that is how you prefer to look at your documents. Next slide. Inside, you're going to see these different scenarios. So we can't capture everyone's scenario, so we do the best job we can. There's about 22 different scenarios in there, and you are tasked with finding the scenarios that closest match your own description. Oh, and I do want to take another moment to say we do now have an interactive version of this online too. And so you're going to see both. So one of the first lines under auto insurance, you're going to see the comparison shopping that's available online, and you're also going to see that PDF. The PDF is packed with more information. You're going to see more detail, etc. But if you're a little bit more impatient or you don't want to deal with the whole PDF and you don't want to deal with all that, I do highly recommend then just using the online version where you can just put in a couple variables and it'll give you an idea of what you might be paying for those rates. But if you're looking at the PDF, you're going to be looking at those 22 scenarios and you're going to be tasked with finding the scenario that closest matches your own description. So here we have single male age 50 who's a renter, and we also have single female age 50 who is also a renter. And then those scenarios go into great detail about the vehicle that they're driving and the limits of their insurance policy. And now again, that's where I say it's not going to exactly match your own situation. We have to have, in order to, essentially get a quote from the insurer, we need to give them exact information, right down to 2016 Ford F-150. And so it's just a challenge to find the closest one to you and then just get in the ballpark of what those rates might be for different companies. Next slide. And then this is what you're going to see inside. So if you chose scenario 10, you can choose to turn to the pages that have scenario 10 and your applicable county. And it's going to show you the rates for all the different insurance companies. So right there, if I'm looking at that first column being Allegheny, just alphabetical order, it is showing me the different rates for that particular scenario. And if you look at it, you do see that there is a lot of variance from company to company. And I think that's kind of makes my point that it is worth shopping, because maybe if you only called one because you saw that commercial or you saw that billboard, you might not be getting the best rate that you could for the exact same auto insurance policy. The asterisks that are on the left-hand side, those indicate the insurers that consider credit scores in determining premium. So if you're a person whose credit's not that hot and you want to possibly just contact the ones that don't look at credit, that would be a possibility to you. We try to make that information available to you. Next slide. And here's just a zoom in so you can see it. It might have been a little bit difficult to see on the last page. The agency insurance company here you see with the $12.75, and then you see AIG in the next one at $29.76. So again, these are rates, by the way, these are rates for 1 year. So most of us are used to thinking about insurance in terms of monthly or quarterly. So if that's how you think about it, divide that number by 12. If you think about it quarterly, divide that number by 4. And that'll kind of give you a better idea of, what you might pay versus what you're paying now. Next slide. We have this little policy worksheet, and that's so you can keep the information organized. So let's say you chose 3 insurers to call from the list. You can put the names at the top. And then as you go along and you get their information, you can kind of keep it in one spot. And that's within the hard copy of the rate guide itself. And obviously, if you download the PDF and you print it, you could get that information too, or you could just look at it and jot it down, on your own piece of paper and just kind of make sure that you're setting up like a little bit of a chart. So it's easy for you to reference. I've called 3 companies and now I'm choosing one. So it's just easy for you to make that decision when you're done. Next slide. And just one more thing. I know that can be a lot of work. I do know, of course, from experience, etc., that shopping for auto insurance can be a lot of work. And it can really be something that, when I say take the time every 2 years to shop around, I do mean it. It will save you a lot of money. There's a good chance it will save you a decent amount of money. It is absolutely worth it, but you do kind of have to take a breath, give yourself that space, set aside a couple hours and just kind of make it happen. But I do know it is a task for sure. So now I'm just going to talk a little bit about homeowners insurance. Just why do I need homeowners insurance now that I've paid off my mortgage? And so because this is a presentation for older adults, you may have paid off your mortgage. You might be close to paying off your mortgage. You know, maybe you're 5 or 10 years out from paying off your mortgage. And maybe you've been paying your homeowner's insurance the whole time just through escrow, right? So it's kind of been on autopilot for you, and it's not something that you really have been thinking too much about. And I mean, I do want to recommend, number one, understanding your homeowner's insurance, definitely, but also understanding, yes, you are required to have homeowner's insurance through the terms of your mortgage. And no, there's no Maryland state law that says that you have to have homeowner's insurance, right? So once it's paid off, that's your decision to make. It's not state, it's not federally mandated, but think carefully before you cancel your homeowner's insurance. It is not recommended. Next slide. So why do I need homeowner's insurance now that I've paid off my mortgage? Your home might be your largest asset. The homeowner's insurance is there to pay for the damages covered under the policy. That's helpful. Most people don't think about their homeowner's insurance until they have a reason to use it. Maybe you've gotten lucky. You know, maybe you've made it all the way through a 15 or a 30-year mortgage without filing a claim. It's just not something that you've thought about. Maybe people think, you know, fires, thefts, and accidents are things that happen to other people. But unfortunately, if you do experience a loss, it can really, I mean, it can be very expensive. A homeowner's insurance loss can easily go into the tens of thousands of dollars. And for a lot of people, that's not an easy amount of money for them to come up with. And then also we know, I mean, there can be catastrophic losses, fires, etc., which destroy your home. So it's just, again, the decision will be on you, it will. But it's highly recommended that you move forward with keeping your homeowner's insurance. And maybe you even take that opportunity, you know, you're done with that mortgage, take that opportunity to shop around, learn a little bit about homeowner's insurance, shop around and see where you can get the best rate. It might be sort of an opportunity to save some money. If you've had it on autopilot, your homeowner's insurance, you've stuck with the same company, you've kind of had it on autopilot for a long, long time, you might be surprised how much money you can save by shopping around. Next slide. All right, now I'm going to talk a little bit about insurance fraud. So insurance fraud can be divided into two major categories. All right, so insurance fraud is fraud by an insurance entity. So by an insurance entity is going to be an insurance producer. So remember, the insurance producers are your agents or your brokers. And the other thing is against an insurance entity. And fraud against an insurance entity is essentially going to be fraud committed by consumers. Next slide. So by an insurance entity. Fraud by an insurance agent, a company employee, or someone who's posing as an authorized representative of an insurance company. That could be fake or false documents, false statements, pocketing premiums, or selling unauthorized insurance. These are all things that you need to be aware of. If you're working with an agent or a broker that you don't know, or somebody, an authorized representative, or you think is an authorized representative of an insurer, you can call the Maryland Insurance Administration and you can confirm that that person is licensed with us. If you haven't worked with them, it's highly recommended that you do so. Otherwise, you could fall victim to these fake or false documents. That could be fake insurance that you're being sold. False statements, it can just be plain lies that you're being told. Pocketing premiums, that could be done by a licensed agent or broker where you've paid the premiums to them, but that never actually made it to the insurance company. You can protect yourself from that by making sure that you receive documents that you're expecting from the insurance company in time. And also be careful about paying in cash. Not recommended at all. So make sure that there's a paper trail. You can pay with your debit debit card, your credit card, you could write out a check, paper trail, and then make sure if you're expecting some documents in the mail, you're expecting your insurance card, you're expecting your insurance policy, and you didn't receive it, follow up. And then selling unauthorized insurance. So again, if you're suspicious or if you don't know that person, I highly recommend calling the Maryland Insurance Administration and making sure that the person that you're dealing with is authorized to be selling you that insurance product. Next slide. So again, more insurance fraud by an insurance entity. So premium diversion, that's the embezzlement of insurance premiums. Okay, so back to the last slide, your premiums haven't made it to the insurance company. Your premiums haven't made it to the insurance company, you don't have insurance. That's a problem. Churning. Churning is the illegal practice of unnecessarily replacing life insurance for the purpose of earning commission. All right, so this agent, broker, convinced you to purchase this new life insurance policy and you didn't need it. It didn't make sense to you, and that's something to be careful of. If you're considering replacing a life insurance policy, and I will touch on this a little bit more in the next set of slides, which is life insurance, it's just something that you need to think really carefully about. You need to make sure that it's something that you need, make sure it's something that you want, and make sure that it makes sense for you to cancel out of that policy and purchase a new one, because you can lose money and you might not even get the best rate going forward. You know, you're older now, etc. There's plenty of reasons to think really, really hard before you switch your life insurance policy, before you end one life insurance policy and begin another. I just want to say it can make perfect sense under the right circumstances, but just beware. Next slide. So fraud against an insurance entity, that's going to be consumers committing insurance fraud, fraud by individuals, policyholders. It could also be medical providers. So what are the providers? Those are the people who give you medical care. Essentially, the providers could be the doctors, the staff who's processing the claims, or other service providers. So fraud by individuals, policyholders, medical providers, or other service providers against an insurance company to receive money by filing a false claim or inflating a legitimate one. Could be arson, disaster fraud, somebody taking advantage of a disaster situation, like with Hurricane Ian right now. Taking advantage, going door to door and attempting to take advantage of that situation. Creating a fraudulent claim. So just a fake claim. Someone broke into my house, no one broke into my house. That's completely fraudulent. Exaggerating a claim would be somebody broke into my house and I claimed that I had 7 laptops, but I had 1. So that's overstating the amount of loss. That is insurance fraud. And a survey recently, has shown that a double-digit percentage, it's like 25% of insurance consumers think that it's okay to exaggerate a claim. So that just puts into perspective like how common this can be. But that is insurance fraud, and that is against the law. Medical fraud, so medical bills, and then false health claims, all those fall under insurance fraud. Next slide. All right, so auto insurance fraud. Here are some common stage accident schemes. If somebody might sideswipe you, it might be a hit and run. It can be various situations where people stage accidents. There's several different situations where people stage an accident, and you do need to be careful. If you don't feel safe, definitely you need to call the police. You need to take note of how many people were in the vehicle that you were in an accident with. And if in Maryland, in simple fender bender type accidents, you don't have to call the police. You can exchange information and you can move on your way. But if you're suspicious at all that that person may have caused this accident on purpose, then you definitely do need to contact police. You need to contact the authorities, and you need to have a police report filed, and you need to make sure that you know how many people were in that vehicle so they don't claim that there were 8 people in the vehicle later when there was 1 or 2 or just 3. And so it's really important to be aware if you're suspecting that someone caused an accident that you were in on purpose. Next slide. A little bit about contractors. So most Maryland contractors are honest, but it is important to learn the warning signs. So this is contractor fraud prevention. If you didn't request it, reject it. So if somebody just comes to your door, get at least 3 written estimates for the work and compare those bids. Check the credentials, make sure they're licensed, check their references, and make sure they have insurance. Contact the insurer to make sure the policy is up to date, and make sure that your contract states estimated construction schedules and prices for labor and materials. Next slide. So check that they're licensed. Ask for a copy of a current general liability insurance certificate. Ask to see a copy of their workers' comp certificate. Get a signed contract before the work begins. And don't pay in full before the work begins or before it's finished. So don't pay in full before it's finished. And don't pay in cash. Like we talked about before with the premiums, same with contractors, don't pay in cash. So some common signs of fraudulent contractors. They state that they're approved by FEMA or other government agencies. Probably a fraud. They require the payment up front to do the job or to get it done faster. They approach you offering unsolicited services. So I didn't know there was anything wrong with my roof. Something like that. That's suspicious for sure. And then they suggest that they can provide advice on how to interpret insurance policies. Not the job of your insurance contractor, not the job of your contractor. Next slide. So how can you protect yourself? How can we protect ourselves from insurance fraud? Talk to someone that you trust if you're confused or you're uncomfortable about any financial decision, but any insurance related decision. Don't answer calls from unknown numbers. Most of us don't, even if it's just because it's annoying. Don't open email, text messages, and links from unknown senders, especially those links. Opening those links can get you in a lot of trouble. Remember that scammers make threats. They can and they will threaten you, and they can and they will make false promises. Beware of anyone asking you to pay bills or debts through gift cards or through money transfers. So anytime they want you to pay something through gift cards, money transfers, big red flag. Next slide. Don't take surveys or play games online that ask you for personal information. Be really, really careful about that. I mean, that's easy to slip into. You can take a survey and play the games, but if they're asking you for personal information, stop. Reconcile your insurance, your medical, and bank statements to check for fraudulent activity. And that, that takes a little bit of time out of our life. But keep glancing at those bank statements. You might want to be checking your bank account every few days. If doing it once a month when the statement comes is overwhelming, make sure that's just something that you get into the habit of doing on the regular, making sure that everything looks like it's supposed to look. Beware of individuals offering free products or services in exchange for personal identifying information. So just be aware. Are there legitimate sources? Like, did we check out at Kohl's and they asked for our phone number and our email address and we gave it to them, you know, because we want Kohl's cash or whatever. Some of those situations, you know, we do them. Some of them are okay. But be careful. When somebody asks you for that information, is this an entity that you trust? If your answer is no or I don't know, then don't give them the information. Next slide. You are encouraged to report insurance fraud activities to us, the Maryland Insurance Administration. You don't need to give your name. In these situations, if it makes sense or if you're afraid, you can remain anonymous. There's a phone number here. It's 1-800-846-4069, and there's an email address as well. Next slide. All right, one last gear switch. Are there any questions in the, Sharon, do you have any? I don't see any questions in the chat.
No, not right now.
Okay, all right. Yeah, we'll just do the Q&A at the end if anyone has any questions. So now life insurance. Switch gears and we're going to talk about life insurance. Many people purchase life insurance and annuities to provide security for themselves and their loved ones. Your need for life insurance varies with your age and your financial responsibilities. So your need for life insurance varies with where you are in life. It's not always the same. Sometimes you might need lots of life insurance. Sometimes you might need a little. And in some cases, you might not need it at all. All life insurance policies are not the same. Some provide coverage for your lifetime. Others cover you for a specific number of years. Some build up cash value, some don't. So we're going to look at different types of life insurance. Oh, next slide. Okay, so term life. Term is it's a period of time. So term insurance is going to cover you for 1 or more years. It might cover you for 1 year, 2 years, 5, 10, 20, 30 while you're working. It pays a death benefit only if you die during the term. Term insurance generally offers the largest insurance protection for your premium dollar, but it doesn't build up the cash value. So that means if I have $50 a month to put toward life insurance, I can get, provided that I qualify, I can get more life insurance that's term than I can that's permanent. Because with term, all I'm doing is paying the insurance part. There's no cash value part. There's no cash value being built up. With permanent, you're paying for the insurance part of it, but you're also paying to build up that cash value. So term insurance offers the largest insurance protection for your premium dollar, but it does not build up cash. Generally, term insurance offers lower premiums in early years and they increase when you get older. So, I mean, I think that logically makes sense. Our risk, it increases as we age. You can lock in those rates. So you have a 20-year term and you've locked in that rate for the next 20 years. So it's not necessarily increasing every year as you age, depending on, you know, how you've purchased the policy. You might lock in that rate for 30 years. But after that, there's a good chance that you're going to see a rate increase. Next slide. So permanent insurance. Permanent insurance includes the universal life that you hear about, that you might have, variable universal life, whole life, and it provides long-term financial protection. So with the term, there's a term, 20 years, 30 years, 5 years, whatever it is. Whole life is an insurance product you can keep for, or permanent insurance is an insurance product that you can keep permanently for your whole life. The policies include a death benefit, and in some cases, cash savings. So in most cases, they include a cash savings. And because of the savings element, you pay more. The premiums are higher. Next slide. All right, some frequently asked questions. Can someone else take out a policy on my life? Can someone else take out a life insurance policy on my life? Yes, but a stranger cannot buy a policy to insure your life in Maryland. To buy a policy insuring someone else's life in Maryland, certain conditions must be met. Next slide. All right. When can someone buy a policy on my life without my consent or without me purchasing or without me signing the application? So I haven't signed the application at all, and yet somebody's insuring my life. Your spouse can do that. Someone can do that if you lack the legal capacity to consent and that person has an insurable interest in your life. A parent, a step parent, or a spouse can do that if they're purchasing a family policy that's going to be insuring 2 or more family members, and or the person to be insured is a minor, so less than 18, and the purchaser has either an insurable interest in the life of the minor or the minor is dependent upon them for support and maintenance. So those are the situations in which someone can buy a policy on your life without your consent or without you signing the application. Next slide. Okay, so what about these companies that advertise no physical exam? So everyone's seen these ads on TV. And it's true, there's no physical exam. But what's the catch? So the insurance might be more expensive than if the company required a physical. Okay, so the insurance is probably going to be more expensive than if the company required a physical. And although there's no physical, you're still probably going to answer a few broad questions about your health. So no physical, but they are going to ask you some questions. Next slide. Okay, so what about the ones that say you cannot be turned down? These ads are referring to guarantee issue policy. Guarantee issue, you cannot be turned down. The company is not going to ask you any health questions at all. But they know that they're taking a risk because people with bad health could buy their policies. People with bad health will buy their policies. The company balances that risk by charging higher premiums or by limiting the amount of insurance you can buy. So you might only be able to get a couple $1,000s, but you cannot be turned down. So sometimes the premiums can be almost as much as the insurance benefit to be paid to the beneficiary. Theoretically, they could be more than what is going to be paid to the beneficiary. So, there's certainly people that these policies might make sense for, but make sure that you clearly understand the policy that you're purchasing and speak to an advisor or somebody that you know who understands insurance if you don't clearly understand the policy. Next slide. All right, so frequently asked question about permanent life insurance. So remember, permanent life insurance, that's like the universal life, that's the whole life. You can keep this product for your entire life. It builds up a cash value. I understand that my permanent policy will be fully paid up at age 65. What does that mean? It means that you've made enough premium payments to cover the cost of insurance for the rest of your life. The company plans to use the cash value to pay premiums until you die. And if you take out the cash value, there might not be enough to pay those premiums. All right, so let's step through that. They're telling you when you turn 65, you're paid up. That cash value that you've had setting aside, we're going to start to use that. We're going to draw that down to pay your premiums. So, but no more payments from you. You can just go ahead and we'll draw that down. That's fine, unless you use that cash value. And so if you do use that, then it's quite likely that you would have to start paying a premium again. And so just something to think about. If you get a fully paid up policy, but you use the cash, you may have premiums again. Next slide. So factors to consider when you're shopping for a policy. Why are you buying life insurance? Is it burial expenses? Is it to offset your income? How much coverage do you need? So make sure that you go into the conversation with the agent more or less having the answers to those questions, right? You've already thought about this. I'm not going to say that the agent or the broker is going to have some advice, some trigger a thought that maybe you hadn't thought of on your own, but at least think through these questions and come to the table with an idea of what you're looking for. And also know how much you can afford. Like, you've gone through your budget and you know where it fits. How much life insurance can you afford? How much can you afford to pay on a monthly basis? Next slide. All right. Finding a missing life insurance policy. So this is common. Someone passes away, a family member knows that they had or thinks that they had a life insurance policy, and no one can find that information. We do have a video about locating a missing insurance policy. I recommend it. Again, it's on a YouTube page. To get there, you can get there from our website. You can just Google Maryland Insurance Administration YouTube. It should take you there. You can go to YouTube, look up Maryland Insurance Administration. But what do you do if you can't find this policy that you really think exists? We recommend that you check the bank accounts and bills for evidence of the existing policy. But even if you don't find any evidence, it doesn't have to stop there. Check safety deposit boxes, check online accounts. You might locate information, but you don't have enough information. You locate a policy with contact information, call them directly, but you have no contact information. You can contact the Maryland Insurance Administration to see, is this company no longer in business? Where do I go now? Next slide. But if your search has not uncovered any leads, and many searches do not uncover any leads, the National Association of Insurance Commissioners can help you. And that is a free of charge service. The link is here. You could just Google, you could come to our website and ask, you probably won't remember at this point, but NAIC policy locator, or you can Google something along the lines of finding a missing life insurance policy. I recommend calling us. We're happy to give you this link if you don't have it. So you're looking for this life insurance policy, they can help you. Make sure that you have enough, as much information as possible. You're going to need their legal name, their birth date, their death date, and their social security number. Those are 4 things you're going to have to bring to the table. So legal name, birth date, death date, social security number. Beyond that, any extra information is great. Previous legal names, addresses, the extra information will just allow them to perform a more accurate search. Anyone who believes that they're a beneficiary of a life insurance policy, if they're next of kin or they're a representative, they can request this information. And it's called the NAIC Life Insurance Policy Locator.